What's up, guys? Just want to give you an update on the portfolio. I've been trimming shares and raising cash, and I actually sold out completely of 2 different stocks of my dividend portfolio. Stick around to the end and I'll tell you exactly which stocks and why I did that. I'm sitting about 15% cash across all portfolios because frankly I don't see a lot of opportunity and upside over the next coming months, and I do see some potential buying opportunities. I'm watching a few stocks, Lamb Research Corporation, Expedia, Visa just hit the screener recently, but it's still expensive. I'd like to see a little pullback, maybe even Applied Materials. Like I've been saying over the last few videos, is that I do see some near-term volatility that could be introduced into the market. We've seen the tech slow down and the cool off with the rotation into the Dow and small caps. The important speech by Jerome Powell tomorrow morning at 10 a.m. Eastern at Jackson Hole could be very pivotal. It's basically his last keynote speech in his long 7-year tenure, and we will likely hear, in my opinion, a hawkish tone from Jerome saying that he's worried about inflation and that he needs more data to support a September rate cut. If he does come out with this hawkish tone, I do not think the markets will like that, because currently the betting market is pricing in an 85% chance that the rate is cut by 25 basis points. That is the federal funds rate in September 17th meeting. So let's get on to what I promised earlier, the 2 stocks that I cut out of the dividend portfolio and why. Stock number 1, Nike. Now, I began scaling into this position in April and May when Nike was trading at the mid 50s and low 60s. I bought it because I saw value in it as a turnaround play. I made roughly 25% on this position in just a matter of 2 to 3 months of holding. Now that the stock is trading at a 35 price to earnings multiple, I saw less value in holding the stock during a turnaround story. It's important to not fall in love with a stock and pick the fruit of the tree that you planted. And the next stock that I completely sold out of is Target. Now, Target is trading at a historically low price to earnings multiple, and that's for good reason. They're having declining sales growth and they're losing market share to big competition like Walmart and Amazon. On paper, Target looks like a value stock, and it very well may be if they turn the ship around, but sometimes you have to use your gut. Frankly, I listened to their last earnings call and I did not like what I was hearing. You see, Target in the early 2000s was known as Target. It was almost as if it were a bougie Walmart or a nicer Walmart. Today, it does not have that identity. And honestly, the last couple of times that my wife and I have set foot in the store, we end up leaving and putting all the items back on the shelf once we look up on Amazon that prices are far cheaper, or even Walmart. I'd rather not tie up the capital because I don't see this trend changing.